Let's talk about the single largest mistake that a majority of Canadians make when shopping for a mortgage. And that mistake is looking for the lowest mortgage rate. Now you might be like, what? Conrad, aren't you wanting the lowest mortgage rate? And the answer is a definite maybe. The truth is that looking for a mortgage based solely on rate is an unsophisticated and inexperienced way of shopping for a mortgage. Here's an analogy that I give to all of my clients. Let's say that you and I were shopping for a car, and I gave you two choices. I said, there's car A for $3,000 and car B for $5,000. And I asked you, what's the better deal? Well, obviously, based on what I just told you, you would say car A because it's $3,000. But we know from our own car buying experience that we would never actually shop for a car that way. Why? Well, because number one, we don't know if the make and model is even going to fit our family's needs. For all we know, what they're selling is a minivan and what we need is a truck, or what we need is a truck and what they're selling is a minivan. Number two, we don't know the long-term cost of that vehicle either. Maybe it's going to cost more in repairs and maintenance over the next few years, or maybe it's going to cost more in licensing and insurance, or maybe even it's going to cost more in gas just to drive the thing around. Number three, we also don't know the short-term cost of that vehicle, because for all we know, it doesn't even have car doors or car tires, or maybe it's going to need an $8,000 engine repair almost immediately. The point is that mortgages are a lot like that. The rate of the mortgage is nothing but the price of the mortgage. It doesn't actually tell you what you're trading behind the scenes. For all you know, behind the scenes, they're cutting back on things like portability or assumability, or reducing prepayment options, or they're throwing in unnecessary collateral charges or bona fide sales clauses, or worse yet, cranking up the penalty calculations and making that interest rate differential penalty that much larger. Now, is that to say that low rate is always bad? No, of course not. Low rate is just low rate. It is a thing. It's a thing that you can pursue as long as you understand some of the trade-offs that you're likely getting in order to take advantage of that lower rate. Sometimes those trade-offs can be things you don't care about, in which case, of course, you could take the lower rate because you understand that the trade-off that you're making is something that isn't going to impact you significantly. But other times, those trade-offs can definitely impact you in a significant way. Here's an example. Let's look at 2020 and 2021 when the pandemic caused mortgage rates to come crashing down. You had literally more people than ever before in all of Canadian history go the variable rate option. And one of the reasons for that is because variable rate mortgages were lower than fixed rate mortgages. So if you wanted the lowest rate, variable was your option. There were some banks even bragging that you could get your mortgage under 1%. So I got the allure. Meanwhile, during that time, I was trying to convince everyone and anyone I could that they should be locking in for as long as they possibly could. And if you're one of the people who benefited from that, well, then you're welcome. Now, if you were to allow any one of them to go back in time, I am confident that they would have bypassed the lower mortgage rate and opted to take the slightly higher interest rate, but fixing it in for a longer period of time. Now, that's just one example, although a recent one, of how many people ended up making the wrong decision by just pursuing the lowest mortgage rate. And I think a lot of people nowadays are repeating that same mistake by locking in longer term mortgages that have unnecessary collateral charges, that have bona fide sales clauses, and more importantly, have really, really high penalty calculations. Now, does mortgage rate matter? Absolutely. But the goal here is to make sure that you end up with a cost-effective mortgage, meaning the lowest rate that you possibly can get while still getting the right mortgage. Otherwise, what you might end up with is a crappy mortgage at a low price, and you're probably further behind because of it. Now, if you feel like you learned something from this video, or you feel like this video just changed your life, then make sure you like, hit the subscribe button, and the bell notification so you're alerted when new videos come out. It helps you out, it helps me out, it just helps everybody out. And the YouTube algorithm gods will be forever grateful.